Hello, welcome to McPaws Capital. My name is Michael Chu, and I'm with Sunil here today. And we are on the week ending February 2nd, 2024. And we had a crazy week on the market. We'll talk about that more. But I just want to talk about this one chart here. This is from, I can't remember his name, but here's some reference here. And this is the federal funds effective rate market yield on U.S. Treasury securities at 2-year constant maturity. So the 2-year, which is this blue line, right? And what this chart is telling us is that, and the black line is the neutral rate, 0%. And whenever the 2-year and the 10-year difference is more than 1%, you can see the market tends to tank after that, right? So in 2000, the Fed was cutting rate too late, basically. So they raised late rates during that time, but they were too late in cutting rates. So the yield, is so far apart from the 2-year yield, is so far apart from the 10-year yield that, and so that difference is usually around 150 points. And right now, we are same thing with 08, right? You see, and they were too late to cut, and the recession happened. And right now we're at 1%. And this was, I don't know how recent this is, but anyhow, like, we are 1%, and we're getting to the point where, we're starting to see the difference again. So anyhow, so basically the story behind this chart is like, is Fed too late in cutting rates right now, right? And that's the question. That's the big question. Are they gonna somehow induce a recession because they're too late in cutting rates? And that's a good question. And I can't remember the guy's name on IBD podcast this week. Let me go search for him. So yeah, if you type in investors.com/podcast, it will bring you to this page. And this was last week's episode, and this is Stephen McPaulin. He's the guy who talked about this chart. And yeah, he's not as optimistic about the future right now. For many reasons he talked about in the video. One is this chart, right? He thinks that the Fed has made a mistake, and because anytime it's there's a difference of over 1% lag, like that, and the Fed is not doing anything, it usually hints at something bad will happen. So at least based on history. So that's why he believes that something not good will come. And also the other reason is like a lot of the good leaders, like the big caps, they're way overvalued. So that also indicate to him that there's a signs that we are hitting some near-term peak. So that's a interesting, I thought. And again, I like to welcome you all to go listen to that video and see what he has to say. Because I feel like he talked a lot. He's very good at what he does. So my big note here this week is this is a stock pickers market. It continued to be since last year, and it's, if you have a very diversified portfolio between large, medium, small caps, and depending on where the weighting is, it's very hard to have a good run, and also like you have to be able to pick the right stocks. It's a very hard stock market. It's not a broad-based market rally. It's very narrow breadth. We'll see that again this week. Yeah. So yeah, you do your homework and watch them closely. It's still earnings result coming up. We had our first big week of earnings result, and we'll talk about that in a minute. This week, on Monday, there was some news came out from the Treasury Department saying its borrowing costs in the first quarter was 55 billion less than expected. And anyhow, the market rallied on that a little bit. So and also the NYSE and Nasdaq advanced decline line, both of them on Monday went above their 10-day moving average. So at least based on that, it looks good. But as the week goes on, Tuesday we have Case-Shiller index had a 5.4% annual increase on the home sales, home price, and but it was below estimates, however. Also, yeah, the index rose 0.3%, so that's in line. And then the labor market on the JOLTS jumped to 9 million, over 9 million. It was expected to fall 8.7. So that's interesting, right? The job numbers, opening job numbers. And then we had, oil story from, Saudi, mentioning that Saudi Aramco will halt plan to expand its production capacity to 13 million barrels a day. And that really brought down a lot of the oil, groups there, including Schlumberger, Weatherford, TDW, so okay, on Wednesday was the big day in terms of the Fed announcement, but what happened even earlier was the KRE was down big in the morning. Interesting, we'll have to look at XLF, but let's go look at it right now, because I'm worried I forget later. So KRE, so we have this big down day right here on Wednesday. It basically gapped down. See where it closed at the 50-day line on the red line. The next day, it went down further. Finally, Friday, we had a small bounce. You kind of regained half of it. So so this obviously news that New York Community Bank didn't do well. They were the ones who acquired I think I can't remember which bank, Signature Bank or something, or Silicon Valley. I can't remember which one. But anyhow, so they didn't do well. Okay, let me look at XLF. So that's KRE, so the small regional banking group. If you look at the overall financial sector, and you can see this chart is really strong. Like, it's probably one of the strongest sector. You can see the chart, even in January, it did pull back like everyone else, but it bounced back pretty strong. And then until Wednesday, it has because of those news, it reversed. And it was also a Fed day, right? And anyhow, and then look at Thursday and Friday, it did bounce back. So this overall chart looks pretty good. You can see all the volume on the blue days. Yes, you have that one negative day on Wednesday, but overall it looks really good. And the 10-day looks like support level, and the slope is very strong. So I think SLF, it's definitely recovering. If you look at the weekly chart, you can see it has really bounced off this level here, and it was stuck here for many weeks, but finally found support on the 10-week, and then now it's on a really strong slope. So the financial sector is on the road to recovery, and I don't think it takes a genius to figure this out, but it's probably because they're anticipating more rate cuts this year, and that will kind of like the home builder last year. They run before even things are happening. So right now looks like the investors are liking the financial sector overall. But KRE, I don't know if this is a short-term pain. It could be, and this could be buying opportunity. But it is, it did sell off quite a bit on this week, so it might most likely will build a base here. And overall, I think the small regional guys, so far the earnings are not too bad. So I would expect them to continue that trend. The other thing I would say right now is a lot of financial stocks also came on my list after earnings results, so that's also another good sign. So yeah, so what happened on Wednesday with the Fed meeting, right? It was a really surprise shock that they announced there probably no cut in March. And on hindsight, why did they say that? It's probably because of Friday's job report. Even though it came out later, they probably knew about that number. It was really strong. It was like 353,000. They were expecting 170. Really strong numbers. So that could be probably why they knew ahead of time. And yeah, so anyhow, the market took a blow to the chin, and Nasdaq fell 2.2%. Yeah, and S&P performed slightly better. Everything was down, but at least it closed in the upper half of the range. Yeah, so that was a good sign for S&P. And Thursday we have initial jobless claim. It also was higher than expected, but this number is only kind of secondary to the actual job number. And then institute supply manufacturing was 49.1, so also above, and purchasing manager index 50.7, also above. So a lot of good economic numbers. The Treasury on Friday snapped back to 4.01%. Oil price will continue to lose ground. Yeah, so those are the news for this week. So first we'll look at the Atlanta Fed GDP growth model here. And so look at right now, we are 1 month into 2024, and the current forecast is really strong, 4.2%. So that was where basically the growth is there on the economic side, and that might mean one analyst I was hearing, that's going to mean better earnings numbers going forward for some of these companies, a lot of these companies. So this might be a good sign for the market. It could be more resilient. So let's hope this is true. And again, when we're looking at earnings results right now, the most important thing is how the market reacts to it. Even if it's bad, right? It might drop initially, but what happens after? Is it going to bounce back pretty quickly? Those kinds of things. So watch what your stock's doing, and see whether they can, bounce back on even bad earnings, right? Because it's expected that the current quarter is not going to be good. It's more about the guidance going forward, and so with this number in mind, if this is true, if that's strong, then that means the company's earnings should be better, right? So that means that whatever number they can give you is going to be even better. So there's a high chance that stocks could rally even more from here, and that's what we want to see. We want to see more companies continue rally, right? Have the market breadth expand. That's what we want to see. We haven't seen that. We'll look at that in a second, but we haven't seen that yet. So we're still waiting for that. Like Russell is still down. So this is March 20. That's the next Fed meeting, and you can see the rate. So it was at 70% on Friday, so it dropped back. So now it's 62% that it will remain. There's still, actually, I was surprised. This number is it was 30. Now it's back to 38. So there's still a 38% of a cut. So what does it take for the Fed to cut? Again, the inflation number has to come down, right? I think the question was asked during the interview, right? You have a 6-month rolling inflation of 2% right now on the core CPI. So the question will ask the Fed, how many more months you need to see, because it's already at 2%. How many more months you need to see to actually make that decision? And he's like, I don't know, right? We just need more data. That's all he said. He didn't say how many more months. So, so let's say fast forward, 2 months or 3 months from now, and let's say we have more CPI data come out, and if you average that out, and let's say you have 9 months now, or 8 to 9 months now, and it's still at 2%, should they cut? Probably, right? So that's why the timeline between now and May, which is about 4 months away, gives you that room, right? Because that's like at least 3 months of data. So that means by that time they'll have 9 months of data, and that's already closer to a year, and it's still at 2%. Then that gives them a chance to say, hey, we'll cut in May, right? That's why between May and June is a very high chance of cutting. So we go to May, you can see the market has lower now, 60%, 59%, and then in June should be higher. Okay, so yeah, so right now obviously the market, the CME future is pointing to a rate cut in May and June. So that's what this is showing. Okay. This week let's see. I don't think there's many big economic news. There's lots of Fed speaking. This Tuesday there's 4 Fed speaking. So we'll see what they say. You know, I don't know if the market will go down if they keep saying the same thing. It's like, oh, we're not gonna cut, right, in March. So I don't know. I think the market already priced in that news, but you never know. Yeah, there's more Fed speaking. Like this whole week, there's like so many Fed presidents speaking, right? So like yeah. So there's not much economic data this week. So it's all gonna be earnings related. Look at the fear, greed, sentiment. It has come down, obviously, because Wednesday was a big day, drop like that.
It came down.
Yeah, so yeah, it came down to greed level. So you know, Wednesday sell probably scare a lot of people off, which is a good thing, you know, because yeah. So you can see the AAII sentiment is only till Wednesday, and obviously, you know, I don't even know if that accounts for Wednesday's like sell off, but probably not. So you can see the sentiment is so bullish, right? 49%. Yeah, so it's the highest this year, and bearishness is also almost near the lowest this year. So yeah, so that explains Wednesday sell off. I'm just gonna count here: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yeah, so we are at 14 weeks in this rally. And as you can see from this chart, we only have 1 week down out of the 14 weeks, which is really strong rally, right, for Nasdaq. And so if you bought the Nasdaq index, you probably did really well. You know, like I said, if you're not a stock picker, you're probably better off buying the index right now because the breadth of the market is very weak. But yeah, let's look into the daily chart for a second. So yeah, we have Monday bounce right here. And then Tuesday and Wednesday was the gap down. This was yeah, the gap down happened even before the Fed meeting, so that also interesting. But it found support at the 21 day, and Nasdaq is very good at finding support at 21, usually. So yeah, so you know, so here's the slope line, and so it did bounce on. And look at Friday, right? It closed pretty much near the top. So I don't know if that's the highest level close, but let me see. 15,630. Yeah, 15,664. So it is highest close in, you know, in recent days. And yeah, so we're getting closer to this 16,212, right? So that's something to pay attention to. And in terms of how many weeks up, you know, I think we talked about this last week. If you look at history, you know, in 2020, 23 weeks up, that was a strong run. This one, oh no, sorry, that was 2020, and then in 21 you have 15 weeks up here, and then here right now we have 14 weeks, and then last year we had 19 weeks up here. So you know, no one knows how long this will last, but we're coming close to this period's high, you know, so I think we will try to go for it. And then look at S&P. It also, obviously, we know that a couple of weeks ago it broke the new high. But we're getting close to this round big number, 5,000. And Tom Lee mentioned, you know, there's a high chance once we hit 5,000, we will see a you know, pretty significant correction. he didn't say how many percent, but he thinks it will be bigger than normal. So it probably won't be 3 to 5%. It'll probably be bigger than that. So so that's to pay attention to. And IBD study shows most rallies are roughly 18 weeks on average, right? 18 weeks. So it could be shorter than 18 weeks. It could be longer, and so that's where we if we look back at Nasdaq, where I put those numbers up, last year was 19 weeks, and now we're at 14 weeks, and you have seen before 23, 15. So you don't know where it's going to end, but we're getting closer to the average, right? So that's something to pay attention to. Dow, also make new high close, and Dow is really strong. I think this week on Wednesday, even though it was down, it doesn't look that bad on the chart, right? So this is, I feel like this week, and we'll see from the accumulation distribution data we have, that Dow stocks, industrial anyway, in general is doing well this week. So that's also very interesting, because it was kind of doing sideways pattern for a while, but this week it has kind of got out of that range, and now it's getting new high again. So this is also, a good sign for the market, because those earnings come in and stocks starting to move on those earnings, and so at least for the industrials, right? So who knows? Maybe other area will start to do the same thing. But so far, all three major indexes are doing well. And the last one we want to look at is the small cap. And again, we're still back at this 2000 level resistance, and we found another pushback from that level. So we look at daily chart, you can see we hit that on Monday, and you're probably thinking, okay, we're doing well now. We're going to sell in the smooth win and stuff. But then it pulls back. Pulls back to 50-day, the red line right here. And it did find support on the 50-day last time. It looks like it's trying to find support again right now. So let's see if we can hold this level and bounce back from here. So that will be the next thing. And again, this 2000 level has been a strong resistance level. And so obviously this previous high here, recent high is 2071. So if we pass those those levels here, I think the bull is on, right? Like I think Jim Ropel mentioned it, so many people mentioned it. This is the big one. If this can come out, then the broad market rally is on. So we're still watching for that. Obviously, it's being tested very significantly this week. So we'll see where that goes with the earnings, right? Because I think that will determine the next direction. And the small caps are probably the most susceptible to the interest rates movement, because small businesses, they tend to borrow at higher interest rates, right? And so the rates matter a lot to them than the bigger guys who have more cash and so forth. And yeah, so I think because of Wednesday, it obviously set back, and I guess the market knew somehow. And you can see Tuesday it was still above, and Wednesday was the big down day. But like I said, despite all this happened this week, it's still holding up, above this range. So I think if we can hold and then slowly move back up, and earnings do well, they could have a chance to maybe break out. I don't know, but obviously, or it might just be stuck in this range. That's another thing you could do, just stuck in this range for a while until the Fed finally decide to cut rate, and that's when finally the small caps will take off. That's probably a most high chance, because it just couldn't pass this level without interest rate cuts, I think. So on Friday, again, IBD highlight that, despite the gains on Friday, the decliners outnumber advancers by more than 2 to 1 on NYSE, and by more than 1.5 to 1 on the Nasdaq. This is not ideal, right? So we've seen this story before. Whenever the advanced decline line is not doing well, usually foreshadow something worse coming, right? You know, this is S&P 500, and we had this, you know, pretty much last year, and now, like this week, you can see it's actually, you know, not too bad for S&P. It's been holding up, you know. And last week we talked about how it was near the high, so this is, you know, still pretty good, still, you know. But like I said, Friday was an up day, but it still went down. And then on Nasdaq, it's even worse. Like you can see, it's like near the low of this range right here. So techs are definitely, you know, in general, techs are not doing as well in terms of breadth. And yeah, you probably will see that, you know, in your stock. So probably a lot of them are very choppy, except, you know, the few ones. So yeah, so but like I said, S&P is doing much better still. So there's a chance, you know, that could. But like I said, Friday wasn't a good day for this line here. So there's a divergence. So this is RSP, the non-weighted S&P, and you can see it's just like it's not a new high for sure, and it's just holding tight for weeks now. So again, this just tells you, like, if you don't look at the bigger stock, just looking at by individual, like same weighted on the index, you can see it hasn't gone much far. So this is I think this is also interesting. You know, if this, you know, breaks above this, then we might start to see breadth expand, but it hasn't, right, this year. So this is, you know, the same story again. This is, you only can pick the few stocks that are winning, and then the rest are kind of doing nothing. And then you go to Nasdaq QQEW. But this one looks slightly better, which is interesting. So this is the Nasdaq 100 non-weighted. So this one is doing slightly better. This is non-weighted. So this is interesting. So we saw in the weighted one, it's actually doing not as good, right? The advanced decline line. But this one, so on the Nasdaq side, actually doing better. So there's a mixed story here for sure. So this is, you know, maybe, you know, the techs might also start to expand their breadth. We'll see. I haven't seen too much yet. But this, like the last 2 days, Thursday, Friday, it did bounce back, a lot of them. So we saw the 10-year yield almost dropped to, you know, near lows here, but it bounced back right after the Fed announcement. So I think, you know, let me see here on Wednesday. Yeah, so even on Wednesday, it was weird. Like on Wednesday, it didn't actually close in the upper range. I thought it was gonna come back up. It didn't. But then Thursday, it went down lower. Very interesting. But Friday, it came back up, despite the market went up. So it's like, oh, it's kind of like not correlated right now to the market. It was kind of weird. So anyhow, this is still on a big downtrend. So but right, Friday's bounce was strong. I'm not sure if there was any news. Maybe the job numbers, but that was it. So yeah, US dollar slowly climbing up, slowly, very slow. Again, this is still on the downtrend. Yeah, the oil price have a big drop after that Saudi announcement. So yeah, so this is this is not looking good. It came back down below 50 again. So for IBD growth investors, probably this is the most important chart this week. Like this is their IBD 50 stocks on their newspaper. So their top 50 stocks right now, they actually did pretty well this week. You see on Wednesday it pulled back, but on Thursday, Friday it bounced and it made new high. So that is significant. So it shows that, you know, the growth stocks did well this week, despite, you know, the Fed meeting. So I think, you know, yeah. So I think there's a good chance because of this breakout and it's a clean breakout now. I think there's a high chance this will run, right? And this is a nice cup of handle pattern. So let's hope for that. And you can see this has been, you know, not doing well, right? The IBD 50, which represent the 50 growth stocks that IBD follow, has not been doing well, and even last year it hasn't done well, which is again, and then now it's trying to break out now. So this is the first pivot point right here. Is the handle. We still, you know, we have enough, and so now it's going to reach for this previous high. That will be another pivot. So I think this is worth watching because, you know, this again represent IBD 50 stocks that they follow, and yeah, like I can. So this is the IBD 50 on their newspaper. I don't remember how they rank this, but it's based on many like data. But yeah, you can see GigaCloud number 1, Nvidia number 2, CrowdStrike number 3, ELF number 4, DraftKings number 5, Datadog number 6. So this will change weekly, but you can see some of these names here, all have, you know, growth stocks potential. SMCI here, Meta, Workday, you know. So yeah. So this coming week we'll have more earnings, just like last week, except, you know, most of the big caps are gone. We'll talk about that in a second, how they did. And we have LPD, Lilly, Chipotle, Palantir. Let's go look at Palantir. I haven't looked at that chart. So you know, we'll talk more about this, but I think Microsoft failed to lift the AI hype. Because I was looking forward to that. See, Palantir, the AI leader, in a way, is still not doing well. It's still on a downtrend. So the AI hype hasn't started, because this was the last time it started last year around May. So since that time, it has just been consolidating. Really ugly consolidation. I haven't traded this stock in a while. So yeah, just waiting for it to, but it's getting tighter. You can see it's getting tighter. It's not as choppy like right here, like big swings. But it's still on a downtrend, but it's just not as, you know, it's a more smooth downtrend now. It's not as choppy. Usually those are better, because, you know, if you trend forward, you're not going to get chopped up because you obey this channel line. So you might get kicked out right here if you bought it, but at least not as often, right? Yeah, so that was one stock reporting. And then we have Cloudflare, Pinterest, and then on the finance side we have KKR, Apollo, we have ARM and Spotify, AZF in the building. Let's jump to accumulation. So on Wednesday this week, IBD had obviously a distribution day, and it wasn't significant because it was down quite a bit. So now the number is like 2 on Nasdaq, 7 distribution days on S&P. It's you know, it's not critical, but like they didn't change their big picture trend yet. Still on a confirmed uptrend. In fact, on Friday they raised it to 100%, 80 to 100% holding, meaning like, you know, you should be between 80 to 100% deployment on your cash, which is interesting. But what we see here is like, you know, we continue to see the stocks being accumulated, and then on Wednesday we have a reversal of that, but then Thursday and Friday we came back strong. Now on the distribution side, you can see the numbers have also increased. So, you know, basically, you know, because of earnings, there's going to be lots of losers and also lots of winners. So which means the market is being fair right now. So that's what I think, take it out of it. So that means you can still make money, because the market is not punishing everybody. It's just punishing the ones that are not doing well on their earnings. And on the industry group side, same thing. We see the accumulation side increase, and then we also see the distribution side also increase. So, you know, same thing. Now on the sector side, you can see technology didn't do as well. Retail did okay. Industrial did, pretty strong right now. It's the strongest group. Health, kind of net neutral almost. And then we have commodities going down after the announcement. And financials, financial is also weak. So, obviously, with the KRE down, a lot of stocks get dragged down, right? So, so that, it was doing fine last week, but this week they gave back a lot. So, at least a lot of the smaller guys. So industrial and retail, very interesting. Okay. Let's look at SMH. So the semiconductor group. So we have, we had this run very strong. We pull back, and Wednesday, like this is a very exceptional chart. Why I say that is like look at how it tests the 10-day. Like on Wednesday, it was obviously a heavy day for the market, and look at it. It closed at the 10-day. On Thursday, it didn't move much. The market not sure what's going to happen. And then Friday, it came back out. Right? It came back out on this downtrend, came back out. So this is a very exceptional chart, SMH, and it's doing really well. I mean, the two stocks on my list, you can look at right now, NVIDIA. And you can see NVIDIA is up 24% now from the breakout. And look at it on Friday. It just pounded to higher. And, this is a 10-day slope. Again, same thing. Found support 10-day on Wednesday and just went higher. New highs, right? It was a big day, 5%. Wow. Another one is AMD. This one pulled back more. Found support at 21. And again, it came out the downtrend line here, and it's not a new high, so this is weaker than NVIDIA, but this one has come pretty far, so this chart almost looks like it's going for a climax run. So I don't know, we'll see, but yeah, this is also very strong. So there's probably more chip. Any chip you want to look at? There's a lot of them, but those are the two that I follow. Next group is the software group, and IGV. So this one is doing well. Okay, make new high this week. We're not at 20% yet, but we're getting there. And so this is not as strong as the chip, but it's still in an uptrend. And same thing here, very strong chart, right? Wednesday, it closed at the bottom near the slightly below the 10-day, but Thursday it bounced back. Friday, it hasn't make new high, but pretty close to the high. So yeah, and there's lots of stocks in this group, So let's look at the big ones. Microsoft. So Microsoft announced earnings. On the weekly chart, you don't see even any movement, right? It's just on a nice uptrend. So, but on Wednesday, it did suffer a big down day. It closed below the 10-day slightly. The volume is humongous, obviously on earnings day. And then Thursday, it didn't move much at all. Look at Thursday. It's kind of like, no confidence, bounce. So I was like, oh, okay, this is doomed to fail. But then Friday, it kind of moved. So very interesting. So maybe it's ready to come back. I don't know. We'll see. But yeah, the guidance was down, was what the street expected. So that's why it went down. And Wednesday was a big down day for the market. But overall, on the weekly chart, you don't see much change at all. It's just continue on the uptrend. So that's really good. Yeah, so that's, we'll look at more software stuff later. We'll now jump into the other big tech, let's look at Google. So Google didn't do that well on earnings, and you can see on the weekly chart, it it went down, closed it near the bottom at 50-day line. It bounced back on Friday. You see on Friday it bounced back. I don't know if this is going to be sustainable or not, but the downtrend is pretty slow, like really sloped down right now. So, you know, I would wait until it has a more base pattern kind of, you know, and see how it goes. But right now, yeah, they I think, yeah, they definitely lower the guidance. I think they also missed on the ad side. I'm not sure. Yeah, I didn't do that well at all. And so, Amazon came out with earnings as well. Jump on Friday after Thursday report. So they did well, I guess. And yeah, new highs, because it was stuck at this level. It was a really slow rise, right? I think I was telling you I hold this stock like, you know, kind of didn't make much move here, and then finally it came out. So that's good. And yeah, so you can see the numbers are increasing here. So this is, you know, we talked about this last week. This is what we want to see. The numbers continue to increase earnings. And so that's a good sign. And then the big one, Meta. You know, this was a huge move, right? Over 20% on Friday. Look at these numbers. 1, 2, 3, 4, 5, right? So this is what you want to see. This is what's happening, right? Stocks that are doing this, they're going to get rewarded, and this is one of them. So it has a huge jump. I had to trim some position because, you know, one of the things that, you know, going forward I'll be doing more in this month, depending on how much longer this rally lasts. I'm going to start drawing channel lines above, you know, especially because they have, once you have over like 2 months, usually you have enough data to draw the trend line, and that will give you a good idea where that channel line is. And you can see this is way extended, right? So I'm not saying it won't go up more. That's why I didn't sell all of it. But, you know, it's time to start taking profit. It could easily build another base here, right? So, you know, who knows how long that base will take. So I rather start taking profit now, and I'm going to do that to any stocks that are extended. So this is definitely one of them. So Apple also report earnings. They didn't do well on the news, but it did bounce back. That's close at the top of the range, so that's interesting. But right now this is on a downtrend, so I would be careful of that. Yeah. And on the weekly chart, you know, still stuck in this long base. So we have this base here, and then we have this smaller base. So this is like the numbers are increasing, so there's a chance that, you know, it could come back up, I think. And then finally we have Tesla. So Tesla this week actually didn't drop further, so that's surprising. You know, but it is still on a downtrend. So, you know, because last week it dropped so much, right? So now, you know, it's still on a downtrend. So so this Thursday and Friday is not a good sign, right? Because market is up on Thursday and Friday, and this stock did nothing. So that's why you can see the RS line is like curving downward again. So yeah, so this RS line just doesn't look good. It just continued to perform poorly against the market. So yeah, it's not a good sign. Any comments on this? Was there any bad news this week? I can't remember.
Compensation.
Oh yeah. The package compensation package. I don't know if that's a good news or bad news. Probably, yeah, I don't know. But anyhow, the market were neutral about it. So Meta captured 200 billion in market cap on Friday, a record one-day total for any US company. So that's very interesting. IBD highlight a couple stocks, ELF, enjoys a head turning run, and Carlis's cybersecurity leader from foreign base. Another stock they mentioned was Elastic. So we can dive into that. I like ELF. This is David Ryan's baby. He loved this stock. He owned it since last year, so I don't know. He has lots of gains now. I think he hold, like, probably not all position in this space, but he definitely trimmed some. But still, now it's on the move again. You can see on the weekly chart, and it broke up again Friday to new high. So obviously this one, again, lots of earnings coming out, right? So February 6th, that's this week. So we'll see how it does. Next one, Qualisys. This is cybersecurity. This one doesn't look as good. You can see I had the relative strength line going down. This cup with handle, the handle is starting to look not good. Usually you don't want the handle stay below the moving average. That's not for long anyway. So this is like now 5-6 days, right, below the moving average. So that's not a good sign. Okay, Elastic. This one I do own, full position. Looking very healthy. You can see how so this is the base, recent base. You can see how it just kind of doesn't want to let go, and trading very tight. And it come up many times, but it just hasn't been able to take off. Relative strength line is okay. It's kind of neutral, but Friday it did come out, and that's the highest close. And we look at the weekly chart, so you can see here, this is the slope right now. So the 50-day has caught up, right? And that's the thing. This stock has gone up so much from this right here, and you see the 50-day slope, it's catching up, right? So sometimes it takes time, to catch up, and then it runs. So last time it was right here where it catch up, and then it run. And then now it's caught up, so maybe it'll run again, right? So yeah, so that's what it looks like. So the numbers here are very strong. Look at this: 1 cent, 17 cents, 22 cents, 25 cents, 37 cents. Like, the earnings continue to grow, sales are stable, looks good. So this was like, it's not. Normally they don't call high type flag until it's like over 100%, but this is a big gain, right, in a short time period. So it basically, like, to me, this is almost like a high type flag. So it just kind of went up, and then it went sideways for weeks. Basically it built a base here. And so now it looks like, it's ready to run again. So we'll see if it accelerate, and yeah. We'll see, if this stock can go. So yeah, you can see Datadog came out from this deep base here, and it has rised nicely and found support at 50-day. If you go to the daily chart, you can see, yeah, it came up from here. It's been rising, found support here. It did undercut here, and then so recently it's a little bit more choppy than I like. I don't know if there's news here. There's 2 days of heavy selling. Yeah.
And look at that volume of selling.
Yeah, it's huge. So it did break the the downtrend here on Friday. I don't know if there's news either, because it gapped up. But volume was strong. So for me, I initiate a position again. But yeah, but in general, it hasn't done as much as it should recently. So, and that's the same story with a lot of the software stocks. And who knows, like, this is why I feel a little bit more optimistic after Friday, because, market closed strong on Friday. and we saw, yeah, a lot of these stocks, did well on Friday, because recently they didn't do well, right? But Friday was a big move for them, and and like I said, the IBD 50 was doing well on Friday, and a lot of software stocks in IBD 50. So I feel like they have done their pullback, and this, to me, this is like a pullback, and so they have done their pullback. Now it's ready to go again, right? So that's what I'm hoping for, and we'll see the same pattern in many software stocks, like basically the pattern where they did very poorly in the last week or two, and then Friday this is a strong move. Like we basically was at near the bottom of the range, and it bounced, recovered, 6-7 days, right, of gyration here, and we closed at the new high. Like that's a new close, right? New high close. So that's very bullish, and let's see if we can go. So again, the challenge here right now is like you gotta watch, right? Like a lot of stocks are gonna be reporting in the next 2 weeks, and this is I have no idea how they're gonna do. And so if you initiate a position, you want to have some room before the earnings day, and so that you can make some gains. And if you don't make any gains, maybe you want to sell it before the earnings. That gives you an option. But if you're buying before the earnings right away, usually that's just a gamble. So on the tech side, when I filter my list here, you can see like there's not many new highs. Like in terms of relative strength, there's only like a handful here, but you can see a lot of them are just like normal, meaning like they're flat on the RS, and that's not what you want to see, especially when we close the week strong on Friday. So definitely the techs are leaning, right? But that being said, there's a few that's doing well. Nvidia, we saw that. ESTC, we saw that. Meta, we saw that. ANET, that one's also flat. MDB, yeah, MDB is starting to come back. Let's look at that chart. So here you go, right? So we have this like 7, 8, I don't know how many days, 9, 10 days here, 8 days, and it took 1 day, okay, to come out, and that's a good sign, right? So there I initiate a new position again. It hasn't broke out from this base yet, but at least this action on Friday is very healthy. And so on the weekly chart, you can see it's just kind of stuck in a smaller base here after this big base. So it hasn't done much, but like I said, Friday's action is really healthy for MDB. So we'll see. This chart almost looked like ESTC, right? And they're both in the same group. That's also probably why. They're both in the database group. So yeah, the chart looks similar, and also the pattern look very similar. So yeah, so they're both moving right now. Yeah, I would pay attention to this too. Let's see. Yeah, come back. Pinterest. Yeah, let's look at Pinterest. But their earnings coming up, so pay attention to that in 5 days here. So it also came out like really tight weekly base here. You can see so tight. Like okay, let me go back because I just saw the fundamentals here. Like these are strong numbers, right? 8, 21, 28. So we'll see. So yeah, so that's important. Again, earnings coming out this week, but on Friday, look at it, right? So we've been stuck in this zone for a long time. This flat base. And then we came out on Tuesday, but Wednesday we fell back because, Tuesday we fell back, Wednesday we fell back further because of the market. But it took 1 day, hit a new high close, and came out. So, and this one has volume. So this is a good sign. And Pinterest was doing well, right? Like before. So like right here, this is a good run, and then it did a bit. So it had that, 20-25% gain and build a base. So yeah, really strong chart. We already talked about data. Adobe is coming back up. Frog, SMPS. Okay, we gotta talk about SMCI. It did close flat, but let's look at this stock. Very superior. so this run, obviously after the earnings, what was the earnings? Right here. This was the earnings right here. But this was the breakout. Oh yeah, that's the pre-announcement day. I remember pre-announcement day. It broke out, and look at how the lows. This is the lows right here. This is the slope of the lows, and it continues that trend. I don't know how high it will go. Even on Friday, it made a new high. It closed in the middle of the range. I was worried it closed at the bottom of the range. It didn't. You look at the 15-minute chart. See, it was at the bottom in the middle in the morning, but it did close more late, like higher. Like it didn't close at the bottom, is what I'm trying to say. But it's still, pretty. Like it's probably, I don't know. You can see here, 36% bottom range. Okay, but it has run a lot. Like it doesn't look like a lot here, but it's run a lot. So it's a very short time span that it ran a lot. Last time it ran, it did pause, but after significant gains right here. So from let's say 125 to 270. That's a double, right? So, and then it paused here before another run. So we only at 55%. So I don't know. I'm just looking back history. It doesn't mean it's gonna go up 100%, but yeah, but at least right now it's obeying this trend line really well. It never even touched the 10-day. And I mentioned this before when I studied this here, this run here. Like the 10-day would be the best stop line, if you own this stock, right? Because it does obey the 10-day really well when it goes on this run. So yeah, still going. Yeah, and then like I said, there's other stocks here, but like I said, they're not as strong this week. Yeah, so we're gonna jump to the next group now. Retail. Yeah, I don't know. I didn't find many stocks in retail jump, like at least to new high on Friday. So MMYT, okay, Alf, we already talked about MMYT. We already talked about this. It's making a move right now. So you can see this is almost look like it's going for a climax run. I did trim on Friday, just because it ran for 5 days, like pretty strong. And then you can see on my weekly chart, I draw an upper channel line. It's going, it hasn't like moved like significantly in a short period, except for this week, but it did break the upper channel line. They came out with earnings, I think. Yeah. Was it last week? Yeah, last week. But it didn't move. That's the funny thing. I was like, oh, this stock is a dud. It didn't do anything. And then it moves. And then it starts to move after, which is very interesting. Yeah. So it finally moved, and now it's extended. So so this is, so it's a good time to take profit. Yeah.
It's good too, right?
Which one?
Earnings.
Oh yeah, look at that earnings. Like this is superior. 5 cents, 7 cents, 14 cents, 21, 30, 25. Yeah, it keep growing, right? So that's good. Yeah, really strong stock. DraftKings. I think DraftKings is starting to move too. They announced some. I don't know if they bought another business or merged with another business. I think they bought another business. That was the announcement on Monday or something. Yeah, this big gap up. Yeah, they announced it. I think they bought some other business. So it broke out on that day. Yeah, I missed that breakout. So I don't own this stock right now. But it's still a good buy, I think. It's still within, not too far from the breakout. It is moving now. So it looks good. I mean, they only have 2 days down in this run. And yeah, this is a nice clean breakout. I like it. Yeah, it's not the strongest, earnings, but it's still going up like since last year. So yeah. Amazon. We look at Urban, Chipotle. So Chipotle is reporting this week. Shack. Yeah. So not many new highs. They're okay. Let's go look at the industrial now. I feel like I saw the most industrial came on my list this week. Yeah. So let's look at this, guys. VRT. So a lot of them in the contract electrical area. So VRT, this has to do with, you know, the servers, heating and cooling on the servers, power equipment. Yeah, this is really strong. It's starting to look extended, right? Like you can see if you draw the channel line here, it's starting to look extended. So, yeah, you can see, you know, the 10-day is starting to curve up, and if you draw this, it's definitely look extended. So something to pay attention to. Yeah. So so that's VRT. Let's go to the next one. ELTK. Now this one is less liquid. It's only 110,000, but it's doing a nice run. Like, you know, it's a little bit more choppy though. So, you know, but it has the potential to do climax run. The smaller, usually the non-liquid ones, they have a high chance of doing climax run. Kind of like GCT, like Giga Cloud. Yeah, so right now it's starting to, you know, you can see it's moving higher. This is the last pullback. But you know, it looks like it wants to run. So I missed the beginning part, but yeah. So I took a small position on Friday to see where this would go. Still okay. It's not super extended yet. So yeah. So that's that one. Power. Oh, this guy. They report earnings and shot up quite a bit. Yeah, 60% gain this week. Huge gains. Yeah. So this is also in the same group. Look at these numbers. 900%. Like, oh, basically huge growth. It used to be, you know, 10 cents, 50 cents. Now it's like $2, $1. It's almost $2. So huge numbers. Yeah. Look at this long, you know, consolidation. It did do nothing for a long time. So I don't own it, you know. But you know, I tried a couple of times here, didn't do much. Yeah, it finally came out. Look at where like what happened on Thursday. It barely gave back. It closed in the upper range, middle range, and then on Friday, it did undercut Thursday's low, but then it bounced back, and where did it close? New high. Closed at a new high. So really strong stock. If this group is gonna run, I can see it run more, right? Yeah, that's what I'm hoping for. So I took a position. Road. So a lot of the building construction starting to come up. Road, AZAC, that was reporting this week. Road also reporting. So lots of reporting. Fix also in the building area. ETN reported this week. They did well. Let's look at that chart. Here you go. So you can see they're starting to come out, right? So looks good. Saya also another one reported this week. This is in transportation group. So this one also came out. Look at all the stocks starting to come out because of earnings, because they were like stuck in this range for a long time. So those stocks starting to come out. TT, another one. Let's look at this one. I don't know if this one reported or not. Yes, it did. So this one a little bit extended. You see, I draw the channel line here. So Carrier also reported. VMC, no. Oh no, Carrier hasn't reported yet. VMC, not reported. Also moving, building, even pollution control also came out. CLS. So this one I own CLS. Let's look at CLS. But this one, yeah, this one, you know, a little bit extended now, a little bit. yeah, it is moving fast right now. So we'll see what, yeah, you can see this 10-day is starting to curve upward. So yeah, pay attention to the extension here, because they're usually near the top. So something to pay attention to. So there's lots of stock that are extended. GE also did well, Flex, MLM, HWM. Okay, MOD didn't do as well, right? On the, let me see, maybe they did, I can't remember. Yeah, they did bounce back. So yeah, this was the announcement day wasn't good in the morning, and then it bounced back. Interesting, right? So yeah, so that was a interesting move there. All right, so that's this group. So yeah, I feel like industrial have more stocks coming up this week. Health.
Yeah, Modine.
Yeah, Modine. Yeah. Health. There's some group, not as many new highs. See, there's no new high, in fact, only ENSG. The couple of stocks that I like here. Can you hear me, Sunil? Yeah, so let's look at this chart, right? Like Modine has been running for a while, and then here it pulls back, and then it bounced a little bit, and then the earnings day, it went down, and then came back up. So we can see this drop right here, the opening drop right here, crazy drop. But right away, look at this bounce. The buyers are back, right? Like, hey, we're not gonna let it go down. Like, in fact, they're in such a hurry to buy it back. Like, this is a panic sell at the beginning, whoever sold, but the buyers are back right away. Like, whoever wants to buy it, like, they bought it so quick. And so you almost discount this, right? So usually when I see days like that, I don't even look at, where it went down, right? I look at where it closed. And so on this chart, if you omit the bottom part, it just looks like it's still on the uptrend, right? Like this, right?
Mm-hmm.
And so, yeah, the run will continue. Like, especially it was able to, like, come.
And how was their EPS?
Yeah, let's go to EPS. Yeah. You can see it's been growing pretty good.
Mm-hmm.
Like over 50%. And this is probably why at the beginning it dropped, was because their guidance, where's my chart? Yeah, that's 12% guidance right now for next quarter, which is low, right? So that's probably what happened, right? So yeah, so that's the problem. And you see the sales also decrease, so that's probably the problem here, right? Yeah, so I don't know how much more room it can run, but right now the technicals are saying, hey, it wants to run more, right? So, but yeah, because I have a strict rule, like usually 15% or lower, I don't look at them. So this is out of my list right now. But it's still a good number. It's still growing at 12%. It's, and maybe they can beat it. I don't know, right? So, but generally for me, I don't. There's too many other stocks to look at, so I don't look at this one for now. But yeah, this is, in the building group, and like I said, this week, all the building group did well, right? So yeah, like this week, like I said, not many health stock did well, but a few that stand out, is the one highlighted here. So yeah, ISRG, it's still closed at new high, right? That's pretty good actually. Teva, this one also closed at new high, so that looks good. BSX, this one also closed at new high on the weekly chart. So they all pull back on Friday. That's why the RS rating is normal, flat. So right here it pulls back on Friday, but they all like pretty much close near the high of the week, right? So one day is not a bad thing. HCA, same thing. So like, the health stocks, there is some movement, not a lot, right? And SYK, I owned this before the earnings, and it did well on earnings, and yeah, so it did. No, this is not right stuff. It's not right chart. I was like, that looks too good for SYK. Yeah, so Striker, yeah, it was kind of stuck in this range. It tried to come out, and then it pulled back slightly, and then the earnings came up, and then it gap up. So this was the gap up. Looks good right now, holding really tight after the earnings. Yeah, there's quite a bit. Merck, GSK, they're also doing okay. Okay, commodities, there's not much this week. I think most of them were down. This week was there's not many stocks in the commodities did well, but NXT, CEG, and CAT, they all three did well. NXT came out on good earnings, a gap up right here. Yeah, so that's fast move. Caterpillar is still acting really strong. This is a Dow component, so yeah, this is really strong move on Friday. And CEG, Constellation Energy, so this started to move, which is interesting. Yeah, it broke out nicely here. So those three stocks are the only ones I saw that looks well. There's a couple other ones. No, they didn't do that well actually. Okay, skip those. Okay, finally to the financials. PFSI small cap came on my list. APO, this one doing really well. Mark Mini was talking about this on Wednesday. Nice movement. Not a fast-paced one, but it's moving, pretty stable. It looks like the slope is starting to accelerate a little bit. So still far away from 20%. IBKR broke out. Yeah, so this one I took a position. I don't know what happened on Friday, but it broke out. So I mean, this stock hasn't moved much every time it breaks out so far. So you can see here, not much movement. Here, very little. So I don't know if this is gonna work this time. I have no idea. But the volume looks good right down here. See, looks pretty good compared to previous. You can see there's not much buying, but this last few weeks we saw lots of buying. So I don't know. We'll see. SAN. This is this one is a bank's money center. It's probably in Spain based. Oh, this is in Spain. Okay. Yeah, so it has a strong rebound here. We'll see. It came on my list, and it has a strong move right now. We'll see. Like the RS line is really strong. Volume did come in on the earnings result, so we'll see if this bounce. It did make a nice move. Gap right here, so we'll see if this will move. Yeah, this. I mean, I have Visa and MasterCard right now. They're doing decent, right? These are not fast moving stock, but they're, the slope is starting to change now slightly. So, MasterCard, same thing here. This is starting to curve upward now. So, so that looks a lot better than Visa. Stone. Let's look at Stone for a second. Yeah, this one hasn't come out yet, so we'll see. AGO, yeah. So here's another one came on my list. So there's starting to be some small caps as well. So we'll see. But like I said, financial sector got hit the last few days. But these are stocks that didn't, like the MasterCard, Visa, and AXP, they're all doing really well. Like, I'm surprised, right? So I don't know what that means, but they're doing really well. Yeah.